Subdued Friday, tough week. Markets have closed lower every single day this week. Hello and welcome to Closing Bell live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Surabhi Upadhyay. Hi Surabhi, and we've got Nigel D'Souza as always in the newsroom. For the market, it's 17,450 in the Nifty, down 65 points, but the downward grind, the negative trend which started at the beginning of the trading session has continued. 66 points lower on the Nifty, the Sensex down by 200 points, and now the level to track will be the 200-day moving average in the Nifty, 17,362. We're still about 80-90 points away from that level, but this is going to be a very crucial level for the markets to defend, the 200-day moving average. As I said, every single day the markets have closed lower, and this week the Nifty is likely to go home with a cut of nearly 3%. Mid-caps have fared a tad better. The mid-cap index is down nearly 1.2%. The biggest knock is coming on the metal index, with the metal index down 6.5%, and for the day the metal index is down 2.5%, and PSU banks continue with their downward journey, so the profit taking continues over there. There is no Nifty sectoral index which has managed to clock in gains this week. So it will be tough going, right, for our markets?
Tough going. 7th straight day of declines, Reema, and down about 3% for this week, like you said, down all 5 days this week as well. I was looking at, anyway, we've been trading below yesterday's low, so I, went back to check the budget day low, and I think that's the next level that a lot of people will look at, just psychologically, sentimentally. And we are basically about 70 points off that. The budget day low was closer to around 17,350, 350.60 if I remember correctly. So we're not too far away from that. And the other thing that's very disheartening today is that we kind of stand out in our underperformance once again. If you look at European markets right now, they are not, running away in a hurry, but there's a fair amount of green out there. There's nothing new on the yield. The US 10-year yield had pulled back overnight yesterday, and it's pretty much stayed there throughout today's session as well. You can see that green on the European screens there. If you're looking at the US 10-year, 3.8, nothing's changed. The dollar, you can argue, the dollar has been fairly buoyant. The dollar index has been trading northwards of 104.5. That's the US yield. So there's not much of a movement out there. So we're basically falling under on our own weight, and perhaps the lack of buying at lower levels, that seems to be the story, and that's why it is a little disconcerting. Nigel, I remember we were in the same mood last Friday, now that I think of it, and you were telling us, guys, come on, ultimately it is Friday. What to do? I think we're in the pink of health, you and me in our pink colors, not sure about the market.
Well, that's right. Markets are just red. So there'll be no sign of pink. It's only red out there. And, today was a little bit of an uncomfortable scenario actually for the bulls, because it started off in the green and it gave a perfect shorting opportunity to the bears. Now, the only glimmer of hope is the points that both of you all were mentioning. The 200 DMA and the budget day is low. That comes in at around 17,350. It's actually in bang on that spot, 17,350, 17,360 odd. So we need to hold on to that level and then hope for a bit of a bounce. But otherwise, the texture of the market has changed from buy on dips to sell on rallies. And just take a look at the call writing that we've seen. 17,700 call, very, very aggressively being written. 17,600 call as well is being written. But the problem is, in the last 60 minutes, the one that's most active is a 17,500 call. And that's being written very, very aggressively, which is telling you that the bears believe now we're not going to see that 17,600, 17,650. That's their zone that they want to defend. If the bulls somehow can get a positive data point, I don't know whether it's the data that's coming out from the US tonight, or maybe in fact you get a cooling off in terms of the dollar index, the yields cool off, something they require, because this market is net short as we speak. So hopefully we don't fall too much from here on. But otherwise, the moving higher from here on, there's no big reason actually that we should be going up. And that is a bit of a problem for equities in the near term itself. Reema?
Fair enough. How should he position